Are you ready to dive into the future of cryptocurrency and explore what might drive the likely 2024 bull run? It's a thrilling time for the world of digital assets, and we've got some exciting insights to share with you. But before we get started, if you're as passionate about cryptocurrencies as we are, hit that subscribe button and ring the notification bell so you never miss an update from our channel. Now, let's jump in and uncover the factors that could propel the crypto market to new heights in 2024. Think of it like this. The way banks have been handling money is changing, and a lot of this is because of new technologies. Some things, like changes in rules around money or the way Bitcoin works, are making people believe that the value of cryptocurrencies will go up. One big player in this change is called DeFi, or decentralized finance. Last year, the amount of money in DeFi grew by a whopping 1,200%, reaching over $240 billion. It did drop a bit due to stuff like increasing costs in the economy, but many believe it's going to reshape how we handle money when the market gets its next boost. All right, let's break it down. Usually, it takes about 4 years for the market to go from not so great to doing awesome again. Looking ahead, 2024 could be a good year for the market to pick up. Why? Well, because the rules about money are getting better, and some of the big economic troubles are calming down. This might mean lower interest rates, and guess what? That encourages people to invest more money in these markets. So, what should we be looking out for next? There are some important signs and stuff happening soon that we need to keep an eye on. Exciting, right? Okay, picture this. There's a good chance things are going to look up in the market, and there are 4 main reasons why. First, the crazy high prices for stuff around the world are hopefully going to settle down. Second, people are starting to really believe in DeFi. That's the tech that's changing how money works, making it more of a community thing without banks in the middle. Third, imagine out of the 300 million folks who currently own digital money, at least 50 million are expected to move from using traditional online platforms to these cool new community-driven apps. And fourth, there might be changes in how difficult it is to create Bitcoin, which is a kind of digital money. Right now, one Bitcoin is worth about $26,874. So, all these things combined could really push the market upward. So, here's the big question everyone's asking. What's the next big thing for people who use and make apps and stuff in this space? Are we going to see something like what happened in 2020 when DeFi became super popular during the summer, but maybe even bigger and with more people joining in? A shift to economic sustainability. Okay, let's chat about something important. You know how some folks started businesses using what we can jokingly call magic internet money? Well, that's not going to fly anymore. Back in the day, the people who started these DeFi projects, DeFi stands for decentralized finance, by the way, used to give out tons of digital tokens to their first users. It was like getting crazy high interest, sometimes more than 100% or even 1,000% on the money they put in. But here's the new reality. Those digital tokens aren't going away, but everyone's going to be watching a lot closer when they're created. People are starting to ask the tough questions, like, can this project make enough money to keep going? They're wondering if it can hold on to, or maybe invest, more value than it's giving out to users through these rewards. It's all about making sure everything's fair and square, you know? All right, here's the deal. Just because we're talking about DeFi doesn't mean these projects need to be rolling in dough from the very start. Think about it like the early days of internet businesses. The folks starting up these DeFi projects need to think hard about what's called unit economics. That's a fancy term borrowed from the tech gurus in places like Silicon Valley. What it means is they need to figure out how their business can eventually make more money than it spends, especially after they don't need to pump heaps of money into starting up. They've got to make sure the money coming in from their regular operations after covering costs like getting new users will be positive in the long run. Now, in the DeFi space, this unit economics idea is all about making sure the system works efficiently for everyone putting their money in. In simple terms, these DeFi projects have to make sure they can bring in enough money from transaction fees to pay back the folks who provide the cash, especially when they can't just create new digital tokens out of thin air to pay them. What this means for decentralized exchanges. Okay, let's dive into something called decentralized exchanges, or DEX for short. These guys are like the rock stars of the DeFi world, leading the charge. There's this one called SushiSwap that came up with some really cool ways to reward their early users. They even had these things called vampire attacks. Sounds spooky, right? Which were basically ways to get people to switch from another popular exchange called Uniswap. But here's the catch. DEX haven't always been great at using money efficiently. They needed loads of money from people willing to fund them just to keep daily trading going in a way that's not controlled by any one person or company. And because they don't make a lot of money from the fees for the amount they have stored, they had to create their own digital tokens to give back to those who funded them, making it worthwhile for them. We are seeing the rise of more cost-effective DEX, decentralized exchanges now, and this trend could affect other DeFi, decentralized finance areas too. Let me explain this in simpler terms. For example, Uniswap v3 allows people who provide money to the exchange to focus their money on specific price ranges for trading. This means that with just a little bit of money, you can trade a lot more money each day, as long as the prices stay within that range. This helps you earn more fees for each dollar you invest, without needing the exchange's tokens to make more money. Another example is dysect, a platform for trading financial contracts without a central authority. Instead of regular users putting their money into pools, dysect uses professional market experts to match buyers and sellers. This makes it more efficient for everyone involved. Capital efficiency is the name of the game. The next big advancements in DeFi, decentralized finance, will come from creators who can design decentralized business models that make sure people who provide money and trade on these platforms can keep making money. These creators might not even have started their companies yet. That's why we're seeing more and more early-stage Web3 startup accelerators searching for the next big idea. Some examples are Kronos, Outlier Ventures, and BitDAO. To keep DeFi growing and attracting the next generation of Web3 users, creators and projects need to offer different options with varying levels of risk and reward. There are now many different blockchains that can work together, offering fast and cheap transactions. This gives developers many options to expand DeFi and create applications that generate income for users. As Web3 moves towards a future with multiple blockchains, competition will drive innovation to make the best products for people who use them. And that's a wrap on today's exploration of what could drive the 2024 crypto bull run. We hope you found this information enlightening and thought-provoking. If you enjoyed this video and want to stay up to date with the latest crypto trends and insights, make sure to subscribe to our channel. And don't forget to leave your comments down below. We love hearing your thoughts and engaging in discussions with our fantastic community of crypto enthusiasts.